welcome to Markets Next Week. I'm Anupriya Nair, and it's going to be an action-packed 4 days of trading session next week. We also have expiry week coming up, so it promises to be a volatile one. Along with that, a parliament session that will get underway. Will it be a cold one or will it be a fiery one with a lot of debate? All of that over the next 30 minutes and what you should do with your trade as well. We've got an entire research team standing by, Shell, Pranoy as well as Hiral, to take us through the cues for next week and the stocks that are shining on the charts as well. We also have some big voices lined up on the show for you today. With the FII verdict, we speak to Chris Wood of CLSA, Jeffrey Dennis from UBS. The market verdict from the domestic side of it, Mahesh Nandurkar of CLSA, Sanjeev Prasad of Kotak Institutional Equities, as well as a UBS view coming in. And finally, what should you be doing with the sectors and stocks in focus? Mayuresh Joshi from Angel Broking will be joining me in just a minute. But first up, as always, Shell's here with a wrap of the week and what we need to watch out for.
Last week when we entered and saw the markets go ahead and gain for the first time on a weekly basis over the last 4 weeks. So it was quite an interesting week from that point of view. On the last 5 trading sessions, we saw that the markets went ahead and gave positive returns for 4 of these 5 trading sessions. In percentage terms, the Nifty went ahead and saw gains of well over 1%. And in point form, we went ahead and saw the Nifty gain almost 93-94 points. Quite a few of these stocks were in focus. As far as the Nifty is concerned, GAIL was one of those top gaining stocks apart from Vedanta and Ambuja. And on the losing side, on the Nifty, the top losers on a weekly basis were Axis Bank and Infosys. Now on to the next week, there are quite a few major events which may impact the markets. Firstly, the Prime Minister will be visiting Malaysia and Singapore, so any kind of commentary coming in from there will be quite important. The second thing is that Wednesday is a trading holiday, so it's also going to be a truncated week. And besides that, when we come into trade on Thursday, it will be the derivatives expiry day. So volatility is expected on Monday and Tuesday ahead of the derivatives expiry day. Also, the Parliament session kicks off next week, so any kind of announcements coming in from Delhi will also be quite important for our own markets.
Thanks for that, Shell. As we enter into a very tentative period of the upcoming Fed meet in December, what are FIIs making of India during this volatile time? Is this consolidation the much-needed entry point, or are they remaining cautious? Let's listen in.
In terms of India, I'm telling investors that India, while I've still got a big structural overweight in India, the reality is for now that India remains a better relative story than absolute return story. It remains a good relative story because its macro position is much better than most other emerging market countries. It remains of all the bigger emerging markets, the biggest beneficiaries of lower commodities, lower oil prices. My view on oil is that it's a matter of time before it breaks below $40, so I remain bearish on oil.
We feel that the mood is relatively positive, as indicated by the number of investors who are attending this year. And I think you put that down to the fact that this is still the best growth story in the emerging markets, certainly in terms of economic growth, now that China's slowing very rapidly. There have obviously been some uncertainties about corporate earnings growth, which is so key, of course, to the performance of equity markets. But generally, this is a strong growth story, and I think it's in bringing people in because of that. And also, India's had a slightly tough year, perhaps a tougher year than we'd anticipated, especially in dollar-adjusted terms if you factor in the currency as well. And so maybe investors are looking here for some growth opportunities and opportunities to do well with their investments going into 2016.
Mayuresh Joshi now joins me on this conversation. Mayuresh, it's been a volatile week, undoubtedly, very, very stock specific. But what are you making of the market range? Do you feel like we're going to be in this tight sort of 7,770 sort of a range to about 7,900? Or do you think there are triggers on the upside and the downside that could make us break out?
So clearly, I think if you go by the earnings perspective so far, Q2 earnings have been extremely sluggish and subdued. For the better part of FY16, we do not see any earnings recovery happening. So it's only the first half of FY17 that you might probably see some amount of earnings respite in terms of upgrades coming through. Point number 2 would be probably how the capex and the investment cycle starts kicking off. So the government front-ended program in terms of spending what has happened in the first half. The results probably would be seen in the second half of FY16. And clearly, if that continues, I think the capex cycle should start its uptrend in the next 2 to 3 quarters. The government projects have seen decent amount of capex come through. Having said that, I think globally, I think the Fed rise or the rate hike that we're probably witnessing in December, I think largely factored in by the markets. But when that happens, I think a knee-jerk reaction is not ruled out, both in terms of what asset classes will reflect. So equities, currencies, commodities will all reflect, and probably you will see a knee-jerk reaction happening on the downside. Having said that, probably our take is that the markets are in for a range between 7,500 to around 8,200 on the Nifty. And the key triggers probably would be in the winter session. I think if a few key bills that are anticipated, like the GST, the land acquisition, if any progress is made on that front, I think that will be a huge plus for the market. So I think weak earnings, the Fed push off, I think it's largely factored in, discounted. But clearly, I think if the winter session turns out again to be a flop show of sorts, I think you might see 7,500 being broken on the downside. So clearly, I think this range is what we're probably working on the markets at this point of time.
All right, and what's really hanging in the balance from that winter session, taking the cue from what Mayuresh was just talking about, I'm going to head across to the political capital where my colleague Mehek brings us what to look forward to, what could be a very cold session in the political capital at Parliament. Mehek.
Well, all eyes are on the winter session that is going to begin on November 26th, but the run-up to it, the action has already begun. In fact, Finance Minister Arun Jaitley did reach out to Congress Vice President Rahul Gandhi on November 18th. This, of course, in a bid to see if any turnaround as far as the GST bill, the passage of the bill can be done in the winter session. Not just that, but remember, Venkaiah Naidu has also reached out to Mallikarjun Kharge of the Congress, as well as Veerappa Moily, again in a bid to see if any decision can be taken for the smooth functioning of the winter session of Parliament. Of course, on the 25th, that is just one day before the winter session begins, Prime Minister Narendra Modi will be holding an all-party meet to decide and chalk out a strategy as well on how best to handle the winter session. And of course, a united opposition that now we've seen in the monsoon session, that was a complete washout and no legislative work could take place. The biggest issue, of course, here is that whether the winter session will also be a washout, because in the interim period there hasn't been largely any reach out from the government to the opposition parties. Remember, the Congress, the Rashtriya Janata Dal and the JDU together have about 50 seats in the Rajya Sabha and 80 seats in the Rajya Sabha, pardon me, and 50 seats in the Lok Sabha. Of course, a united opposition, again enough to bring down the smooth functioning of a house. We'll of course get you all the details as those political developments unfold in the capital next week.
All right. In fact, we had the opportunity to catch up with the finance minister in Dubai as well, where my colleague Mini Menon sat down with the FM, and he seemed rather confident of passing the GST only if it actually comes to vote in the Rajya Sabha.
Lok Sabha has passed it. The day it is discussed and put to vote in Rajya Sabha, I have not the least doubt that it will be approved. Elections like Bihar don't adversely impact on GST, because I have now calculated the best beneficiary of GST is going to be Bihar. It's a completely consuming state. Once it's put into vote, I have all the 3 supporting legislation, the drafts are ready. The IT backbone for GST is absolutely ready. Now, as I speak to you in the month of November 2015, your question is, will I be able to hit the 1st April deadline? I don't know when it will be passed. But then GST is not an income tax. Sure. So it doesn't have to wait for 1st of April. It's a transactional tax, and a transactional tax can come into operation as soon as the constitutional framework allows it to be.
Mayuresh, what's at stake? You just mentioned the fact that 7,500 could be broken if it is a flop show Parliament once again. The winter session, very critical, especially for GST. In whatever design, at whatever rate, how critical is the GST to just show the might of the government that they can get a big reform through?
So clearly, I think the markets, when the Modi government did come through, I think had a lot of anticipation and a lot of reforms being pushed through at a very fast pace. However, I think the government is doing all its best, and whatever they've done so far is highly commendable. Now, I think for reasons best known to all participants in the markets, I think the GST is not getting cleared, and again, I think the government is having lack of numbers in the upper house. But again, I think the non-passing of GST, if I put it that way, if it does happen in the winter session, again, again, I think that has a lingering question mark on how reforms will get phased out. And again, I think the implementation thereof. So clearly, I think you're in a scenario where corporate earnings are already weak, where the capex cycle has not kicked off. To add to that, I think a substantial reform like GST, which will incrementally add to revenues of the government from FY17, FY18 onwards, if it's implemented, I think that will be a dampener of sorts. And again, I think the fiscal deficit that the government is targeting is more or less based on how the revenue buoyancy will take place, and GST will be a big kicker towards that. So yes, I think any failure on getting GST through will act as a dampener, aided by market sentiments which are already low in lieu of corporate earnings being weak. And again, I think the domestic situation not improving in terms of capex, and again, I think the global scene with Chinese data remaining weak and what probably happens with the Fed rate hike.
In fact, Monday we'll also see a big meeting between PSU bank chiefs as well as the finance minister, where he takes in account what's happening to renewable energy source funding as well as the NPA situation on the ground with most of these big banks. Gaurang's here to tell us what the critical meeting is all about. Gaurang.
Whereas the finance minister is set to undertake that review of PSU banks in his quarterly meeting, really to discuss some of the key issues which are currently under discussion in the banking sector. And the main one, of course, as ever, will be discussions around corporate balance sheets, as well as really the direction in which NPA numbers are proceeding at the moment. Now, of course, there have been discussions on how NPA levels have seen some cooling off, but at this point, it will really be a review to undertake whether there is now a solid indicator that NPA levels have started to ebb. Of course, there's two other crucial areas which could be discussed in the move going forward. Of course, there has been conversation around the bank board bureau structure, and there could perhaps be some deliberations as to banks preparing themselves for that structure as well. Finally, bank consolidation, as ever, is an area which perhaps could be discussed in this meeting, particularly with certain conversations around selling stakes in some PSU banks and overall improving corporate balance sheets of the banks as well. So a whole host of discussions expected in this preview meeting today. Back to you.
Mayuresh, how critical is now the backbone structure of the banking sector? The risk reward seems to have shifted. Look at what's happened in this week. Axis Bank takes a back seat. SBI comes to the front forward. Valuations looking a lot better for the PSU banks. Is the worst over for NPAs for the PSU sector? And will cracks now start to show up in the private side?
No, clearly, I think whatever results have come in, at least in this quarter, yes, I think Axis Bank's number were a blip in terms of how the asset reconstruction sale has happened. But clearly, even if you look at the PSU asset quality structure, I think they have lended to industries, again, where the working capital constraints are quite high. So steel, infrastructure, real estate, sugar. I think you're still seeing some amount of constraints happening through on those industries. So specifically, I think the plateauing of the asset quality probably would happen over the next couple of quarters, to say the least. But again, I think on the private side, we expect, I think, the peaking off in terms of asset quality to probably take place as well over the next quarter. So clearly, I think the asset quality structure would still appear in a mess of sorts over the next 2 quarters. Once the recovery probably starts taking place and working capital constraints start becoming much lesser for the end user industries, the asset quality cycle would show signs of improvement. But again, I think we're expecting Q3, Q4 in terms of asset quality to be more or less at elevated levels. Maybe they'll stabilize, but clearly I think the private sector banks is still where we have a preference. Within the public sector universe, probably State Bank is something that we still like, and more or less to do with what capital adequacy the bank has and the kind of CASA ratios that it still maintains looking at its balance sheet strength.
All right, Mayuresh, stay with us. We'll take a short break. On the other side, we get you some other big voices on the market verdict and what lies ahead. Welcome back to Markets Next Week. Earnings season is behind us and has been a disappointing one. What lies ahead? Are the year-end targets in threat? And are the 2016 targets not looking that encouraging? Let's listen in.
We therefore expect the markets to deliver, about 15% compounded growth over the next 2 years. We believe that the market returns could be back-ended, so it will not be like 15% in year 1 and 15% in year 2. Because the key for the market performance will be the capex cycle recovery, which I think will be slow. Unless the property markets revive, the overall capex cycle cannot revive. So therefore, the process will have to be gradual. But on an overall basis, we expect, as I said, about 30% market returns over the next 2 years.
The consensus estimates of 12% and 20% growth for 16-17 still looks very high. So we still see cuts happening for both 16 as well as 17. I think one of the reasons which is now gradually being acknowledged by the street, which we've been talking about for a while, is the impact of disinflation on earnings. Because we're no longer going to see 6 to 8% increase in prices, and therefore nominal revenues and nominal earnings are much lower.
So I'm still very hopeful on the 1 to 3 year outlook. I'm still very positive about the fact that India will get it right eventually. And I think there's still a fantastic story in terms of, if you look at the medium-term story, whether you look at economic recovery.
Which are the stocks in focus for the week gone by? Which are the charts which are showing some promise? Hiral here with a chart attack.
An eventful week in markets. It was tobacco, sugar as well as aviation counters that have been the highlight of the week. To start off with, tobacco stocks did see a major run over the last 5 sessions. Let's see the chart of Godfrey Phillip. If you see the stock over the last 5 sessions up by almost 29%, and if you see the backdated chart, almost flat. So that's the kind of move that we have seen in terms of where Godfrey Phillip is concerned. In fact, stocks like VSC Industries as well as Golden Tobacco saw a major run up. Moving on to sugar counters, a lot of positives emerging for the sector. Seems that the sector is moving out of the concerns and is expected to get to profitability as per what managements are indicating, with the domestic sugar prices inching higher and with the government taking major steps to curb the issues backed by the sugar mills. Now, if you see Sri Renuka, which is the white line on the chart, the stock is up by almost 27% over the last 5 trading sessions, and Simbali Sugar also an up move of almost 59%. So that's the kind of action that we are talking of in terms of other sugar counters as well. And lastly, moving on to the aviation counters, they have been flying high over the last 5 sessions despite the CCI headwinds. And if you know, we know that the aviation data has also been released, and SpiceJet has reported the highest load factor for the month of October. And if you see the counter, the stock has spiked by almost 28% over the last 5 trading sessions. So that's the kind of action that we have picked up in terms of where charter tags go.
Mayuresh, I want to start up with technology. Infosys has gone on the back foot for all the commentary that we heard from the CEO as well as the CFO on margin troubles in the second half and the visibility that they are getting. But H2 is always seasonally and traditionally a weaker set for Infosys, and the guidance anyway implied a 0 to negative growth in the second half. So why is the market so concerned? It isn't signaling anything new that the market hadn't heard from them during the original conference call.
So clearly, yes, I think as you rightly put through, I think Q3, Q4 are traditionally weak quarters for IT companies. A lot of furloughs come through in Q3. Q4 is when the discretionary spending budgets, at least on the client side, start getting firmed up. Again, I think Infosys commentary related to margins and the compression thereof was a fact which was well known by the markets. But again, I think it's a story which is beyond Q3, Q4. Looking at the kind of management commentary, the client mining that they've done, the expectations in terms of tailwinds for utilization rates to actually go up by 250-300 odd bips. It gives us the confidence that in cross-currency terms, 11% growth is not ruled out for Infosys from an FY17 perspective. Having said that, I think the company itself is focused on a target of $20 billion in terms of top line. Added to that, the kind of cash balances that they've got on their balance sheet, I think would support valuations as well. So valuations around 17 times, looking extremely attractive. So I think I'm not extremely perturbed by what has happened to the stock price. In fact, it gives a good opportunity for long-term investors to actually start chipping in. So Infosys, TCS is something that we really like from the top-tier IT space.
What about pharma, Mayuresh? Have you found an entry point with the kind of cracks that DRL and Sun Pharma have begun to show? Are you concerned? On the other hand, would you be concerned and stay out of it because there's some business